All right, so on the program this evening, like I said, we're going to be touching down on the school fees plan, which we started last week. Yes, that conversation started last week, and I was just trying to let you in on how it all works. And of course, last week we touched down on some of the prospects of you tapping into that kind of insurance plan. But let me just give you this kind of scenario. Adedayo is a 35-year-old hard-working businessman with a family of 4. That means his wife and 2 children. Now, according to Adedayo, he's looking to ensure that his children, talking about Femi and Oyinkansola, would have a quality education as they grow. So he's so concerned about the future in case death occurs, and also about how, I'm talking of how you'll be able to cope, especially now that things are alarmingly expensive. When you talk about education these days, it's in the very, very high corners in terms of figures. So, concerning this and being so worried, he decides to consult with an insurance practitioner, an insurance expert who's a professional to the core, just to seek for some kind of advice. And that's where I'm going to be bringing in my guests this evening. They are, well, I call them insurance experts in their own little right. Joshua Gbadebo is here. He's from ICO Insurance, and he's joining us right here in the studio. Joshua, good evening.
Yeah, good evening.
And also joining him as well, Oluwatumininu. And I'm talking about Oluwatumininu. She was here last week. Oluwatumininu Ogunshola. She's here from ICO as well. Oluwatumininu, good evening.
Good evening.
All right, so Joshua, let's reflect a bit on the scenario I just painted. So, what advice would you give to Adedayo?
Okay, so I'm going to advise Adedayo to put his fear, that is, to where he had the fear about what might happen to his children, looking at the future regarding the education. So I will advise him to put in for the school fees plan. That is, the school fees plan is going to guarantee him a certain amount, that is benefit amount at the end of the duration. And also, should he survive or not, he is certain that the amount guaranteed at the onset will be payable for the tuition of the child. All
right. So the ICO insurance, that's the ICO school fees insurance, is just very suitable for Adedayo, right?
Yes.
So we need to understand what this kind of plan is. And for those who missed it last week, for the purpose of that, Oluwatumininu Ogunshola, just take us through that. What is the ICO insurance school fees plan about? And we needed to explain how it all works.
All right, thank you. So I call insurance school fees, just as the name, school fees. So it's just you saving towards your children's schooling just in future. Like it's a pure endowment policy whereby you just save towards their schooling, like in the nearest future, whereby I want them to go to this particular secondary school university. So I'm saving towards that time, that in case of any eventualities, in case of death or in case of total disabilities, they will still be covered and then still enjoy the expected life that the parents want for them.
All right. So I need you to still break it down for me then, Ogunshola. What does the plan cover then? Can you just tell us?
Okay, so the plan covers death and then covers total disability of parents.
Okay, both death and total disability.
Yeah.
So in the event the parents die before the maturity of that policy, or perhaps they die even at maturity, they still get benefits. That's what it means?
Yes, the beneficiary gets the benefit of that particular policy.
And beneficiary most of the time is the child, right?
Yes, the beneficiary, majorly the assured, is expected to pick the beneficiary at the inception of the policy. So it can either goes to the parent or the beneficiary, that's the child, or the school in which the client intend for the child to go to.
Right. Okay, so let's go to the technicalities of all of this now. And I'm going to be bringing in Joshua here to just break down some things for us. So we painted a scenario of Adedayo, who is very, very worried and is concerned about what to do. You've advised him that the ICO insurance, that's the ICO school fees insurance plan, will be very suitable, right? Now, assuming Adedayo wants to buy this product, how will his premium be determined?
Okay, thank you very much. So I'll be painting a scenario for us to listen to and to look at also. So let's say, for instance, Mr. Adedayo decides to take an 8 years plan for his 2-year-old child and to secure his secondary school tuition fee. with an annuity option. So for school fees plan, we have two options of payouts: lump sum, which is a one-off payment,
Okay.
and annuity options, which can be from 2 years to 12 years maximum. So he opted for 6 years plan in receiving the benefits,
All right.
and he intends receiving 500,000 annually for the next 6 years. So it means that automatically the sum assured will be 3 million naira. So we're looking at the options available for him to pick and what his likely premium would be, and also what is going to likely get at the total benefit with the breakdown.
All right.
So from this scenario, we've agreed that the commencement age of the customer is age 35,
Okay.
and the sum assured is 3 million. So the term is 8 years, and likewise the frequency of payment is annual. So for this 3 million sum assured,
yes.
and the policy term of 8 years, the premium is going to be 304,305 naira at
Every
the premium. Yes, every year for the
Okay.
8 years. And since the customer is also selecting both optional rider than the maintenance rider, so the optional rider, that the one that speaks to waiver of premium on critical illness and maintenance benefit. So because the customer is speaking that's the reason why his premium is 304 naira, 305 naira.
All right.
And he selected an annuity option of 6 years as stated in the earlier scenario. So what happened is that at the end of the policy, because he's picking 6 years plan, the benefit payable will be 3,463,327 naira.
So it won't just be 3 million alone.
It won't just be 3
There's an
million
additional of 400,000.
Yes.
Is that because of the additional riders?
No. That's because he deferred he chose an annuity option of payment.
Oh.
So if it is a lump sum payment, the payment will just be 3 million.
3 million. Okay.
So and as such, so it means that for the next 6 years, Mr. Adedayo will be receiving 575,554 naira in that regard.
For 6 years.
Yes, for 6 years. That is a 8 years duration plan, 6 years benefit payment, and selecting riders.
Right. So over 600,000 is what will be benefited every year.
Yes.
Wow. Okay, that sounds pretty good. Any other scenario?
Yes. So there's another scenario. So we made mention of Femi and Oyinkosala. So let's look at Femi now. So we've seen that Femi is currently in secondary school, and we are planning towards ensuring that the tuition for his tertiary institution is covered. So we are looking at a sum assured of 2 million this time around.
Okay.
And a policy term of 5 years, and a payout option of 4 years. Also annual.
So this one duration is lower.
Duration is lower.
Okay.
So and the payout option is also lower because we are looking at it. Most courses are 4 years, except cases of medicine and law that extend beyond 4 years. So in this instance,
so now let me just break it. So we're doing this for Femi, and we're talking to his future of going to university to have a degree.
Yes.
Okay. So 4 years duration in terms of the term, right?
Yes, in terms of benefit payment, 5 years in terms of policy duration.
Okay.
So it means that the premium payable this time around will be 393,678 naira, and this is basically because of the shorter duration, and that's the reason why the premium is going higher.
So the shorter the duration, the more the premium.
Yes.
Okay. All right.
Yeah. So and at the end of the day, the amount payable will be 2,178,049 naira, which is the total benefit payable. And for spreading it for 4 years, it means that the customer will be, Mr. Adedayo will be getting 544,512 naira.
Wow. Okay. All right. That sounds very, very logical. So now we know how it works and the kind of scenarios that can be painted. So we have these options, these two options for both Oyinkosala and Femi. Any other one? Yeah.
So the first scenario we are looking at. Adedayo saying that, okay, I want to be getting this amount. That's the first scenario. Now the second scenario is that, okay, I am comfortable dropping this amount quarterly. So we're looking at that. So Adedayo said that I want to be dropping this amount annually. Now
every year.
Yeah, every year. So I want to be dropping 500,000
every year. For how many years?
For same period, 8 years.
8 years.
Yes.
So that's like 4 million.
Yeah,
in total.
Yeah. Okay, yeah. So
So what's the sum assured for that one?
So the sum assured is meant to be semi-annual. That is twice a year.
Oh, twice a year.
Yes.
Okay.
So the sum assured will be 7,760,592 because we are using the premium paid now to determine the sum assured.
Okay.
So for the same criteria, 8-year duration and 6 years payout period. So it means that at the end of the policy term, the customer would be getting 8,755,950.
Right.
Yes.
Okay. That's the full amount that your customer will be paid.
Yes.
At the end of the policy term.
Yes.
All right. This all sounds pretty interesting, though it might be intricate for some others. But I mean, it's just straightforward. It's like the more premium you pay, of course, the sum assured will also get to some levels. But let's take it to another level. I'm going to be bringing in Oluwatomi. Now, there was the mention of a child as a requirement for calculation of the premium. Is that correct?
Yes, please.
So what happens should the child die? What happens then?
Okay, so in case that in a scenario whereby the child dies, there's an opportunity for you for the parents to change the child.
Okay.
And then if there is no other child that the client wants to replace with that child, a lump sum will be paid instead.
Instead?
Yes, please.
So can I replace the child with my nephew's child? If adventure, that's my only child?
You can't replace your nephew's child.
It has to be your own child?
Yes, your own child, unless you have the full custody of that child.
Of that child. All right.
Okay. Can I chip in something?
Yes, you can.
So in the scenario you asked, we tend to look at financial relationship.
Okay, just a second. I think I have a call that's coming. Let me see if I can just pick this one right away. Hello there. Good evening. Okay. Did you lose that? Hello? All right, so go ahead. So the scenario that we painted.
Yeah, so in the scenario you painted, we talked about guardian, custodian, and parent. So in an instance whereby you are the custodian, so in instance probably a customer lost his child and is also a custodian to another child, there can be a replacement because there is a financial relationship. Not just being that, this is my uncle's child, let me replace him. We need to ensure that and validate that there's a financial relationship between the policyholder and the beneficiary.
All right, we're going to take a short break right now. This is Insurance on the Move, and of course I have with me in the studios Joshua Gbadebo and Oluwatomi Ogunshola, both of them from ICO, and we're looking at the ICO school fees insurance plan. A brief break. When we return, we'll be asking or perhaps answering the question, what happens in terms of claims, and we also try and see what happens too if I do not make a claim. What will be the outcome of that? My guests will be responding after this break.
There's a friend who'll be there through the sun, through the rain, and a friend you can trust all the way, every day. Live your life, we've got your back, and so I will take you there all the way, every day. Yeah, stability assured.
ICO Insurance, your stable friend, yesterday, today, and always.
Lagos Traffic Radio 96.1 FM. Insurance on the Move is the program, and I still have my friends from ICO Insurance, and this evening we're dwelling on the ICO Insurance school fees plan. All right, I hear that Mobolaji Bankantoni is pretty slow this evening. Somebody's asking what's happening underneath the bridge. All right, control room, and of course traffic managers there, let me know what's happening underneath the bridge. Hello there, good evening.
Yes, good evening.
All right, who am I speaking with?
My name is Wally.
Wally, okay, just hold on 1 second, Wally. Just let me. So I hear underneath the bridge, lawsuit from Sheraton is a very slow one. It's a standstill, and I'm just wondering what's going on there. So traffic managers there, let us know. Underneath the bridge at lawsuit. Yeah, I hear it's a pretty slow one this evening from Sheraton. So let us know what's happening. All right, so Wally, where are you calling from?
I'm calling from Agric.
Agric. How is Agric this evening?
Yes. I'm indoors, so I can't say.
Okay. All right. So talk to me. What's
Yeah.
up? What's the question?
Okay, so this is a good plan. I have two questions.
Okay.
I don't know if I can go ahead.
Yes. Go ahead.
All right, so my first question is, what is the minimum amount someone can start this policy with?
Okay. Minimum
That's the first
amount.
question.
Okay.
Yes. And the second question is, let's say a policy holder, that's the parent,
Hmm.
who has been paying the premium for a while, and all of a sudden loses his job.
Okay.
So will HICO, will they step in and continue covering the child's school fees?
Very, very good question. All right. Thank you so much. I'm sure they will respond to you.
Thank
Okay.
you.
Thank you, Wale.
All right.
All right, last month, and of course, traffic managers there, please keep us posted on what's happening within the Ikeja and Bank Anthony Way inwards Ikeja in the bridge. I understand is a pretty slow one at this time. Let me know what's going on, Joshua.
Yeah.
How much is the minimum that one can put into this policy?
Okay, so one key aspect of the school fees plan is that we have a minimum sum assured, which is ₦1,000,000. However, we have other factors that works in line with this policy, which is the age and the duration. So this actually plays in line. Remember, we said something earlier: the longer the duration, the lesser the premium.
Right.
The lower, the shorter the duration, the higher the premium. So the age of the customer matters a lot. Likewise with the duration.
Okay.
So let me give an instance: a 35-year-old customer would be paying, for instance, 250,000 for same criteria as a 50-year-old customer that will be paying higher, probably 300 or 350. So the younger the customer, the lesser the premium, and that's the reason why we are encouraging not just the older but mostly the younger generations
To come in.
and take it now. That to be cheaper, so that by the time you get to that period whereby you intend paying school fees, both tertiary, elementary or university,
Right.
or secondary, it will be easier for you to augment any other payment that
All right. So assuming the policyholder dies, or perhaps he loses his job. Let's use what Wale said. He loses his job. Is there any guarantee for this policy to still run? Let me ask you about a minute. Is there any guarantee?
Yes, there's a guarantee for the policies to still
continue.
run. Yes, please. There's a waiver of premium for 6 months.
6 months, okay?
Yes.
Okay, so there's a guarantee for it. Let's talk about claims now quickly, because the time is not really our friend. So on this kind of policy, what happens on claims?
So when there is a claim, we expect notification in that regards, and it's brought to the company. Then we look at the notification. So I remember we have different covers. So if it's on debt, what happens is that the premium ceases. The company takes full charge of the premium payable.
Okay.
And if the customer has selected the optional rider of maintenance benefit, it means that a proportional amount of the sum assured is payable to the beneficiary till maturity. And upon maturity, the full sum agreed at the onset is payable to the child, to the beneficiary, or the school of the beneficiary. We will speak to the disability. If there's a disability to the customer or this policyholder, there's a waiver of premium in that regards, which every 6 months, maximum of 3 years, will be confirmation to ascertain if the customer is fit before sum assured is payable. Also for waiver for critical illness, should critical illness emanate on the customer, there's a waiver of premium in that regards. So
Okay.
and the company steps in for that period.
Right. What if I don't make a claim?
Okay, so in case where there is no claim, the maturity benefit is paid
Okay.
at the end of the policy.
That's just it.
Yes.
In case there's no claim at all.
Yes, maturity benefit is paid.
Okay, that sounds something like, very, very reasonable. All right, so I'm having an update here. Let me see, Maryland, let me just see if I can take that right away. It said the update said the reason for the slow movement on Mobolaji Bank Anthony Way is as a result of the closure of the railway crossing at PWD to Ikeja GRA. So we have the influx on Mobolaji Bank Anthony Way. All right, so that's just the simple reason. Those of you who are navigating through that corridor, if you're wondering why it is pretty slow, it's as a result of the railway crossing. That corridor has been closed to traffic. So all traffic navigating right now is through Ikeja, and we have so many vehicles making use of that corridor. That's why you have it pretty slow. Well, patience is what is required. Just bear with us, We are not the cause of the closure, by the way, but then just bear with us. All right, so messages coming in here for you. This one says, Mr. Joshua, do schools themselves know about this plan? And are any of them partnering with ICO to promote it? Kayode is sending that message to us this evening. Kayode, thank you so much. So, Joshua?
Okay, thank you, Kayode, for your question. So, we have several marketers that have engaged different schools in introducing it to the parents of their students. So, and we also coming here to radio is also to publicize it to each and every one of us that do not have this information with them.
Oh, good. All right. Michael is also sending in a message here. He says, good evening. This is a good plan, but is there a digital platform or mobile app where customers can monitor their policy status? Michael from Owode Oniri. Michael, thank you so much for that. So is there a way they can monitor this?
And yes, please. When you visit our website, icoinsuranceplc.com, you can actually see more information regarding this product, and upon signing up to be a customer, you have access to your portal whereby you can monitor your premium and monitor every details information you need to know about it.
Okay, so it's very easy. Michael, so I hope you're taking it out. This one says, Victor, is there a monthly payment option or must it be paid annually? If it is allowed monthly, what if a parent can't meet up for some months? Does the policy lapse immediately? Mr. Amadi is sending this on. Amadi, thank you so much. Okay. So, you want to take that one, Oluwatomi?
Yes. So, there's a monthly option for the frequency of payments. Once we mentioned earlier that we have single premium, annual, semi-annual, quarterly, and then monthly. So, in case that a customer does not meet up for a particular month, there's a grace period.
Okay, for 6 months, right?
Yes. Okay. So, there's grace period for monthly. For annually, it is 31 days, and then for semi-annual, 21 days. For quarterly, 14 days, and for monthly, it is 7 days.
Right.
Yes, so there's a grace period that is applied.
Let me just sneak one more question in because I just pop in it. This one says, good evening, ICO team. Please, this is an interesting policy. What's the claims process like, and how long does it typically take before school fees are paid? Helen is sending this one in from Alakbere. Helen, thank you so much.
Okay, thank you very much. So, based on the claims process, I stated earlier that the first thing to do is notification. So upon notification, one unique thing about the school fees plan is ensuring that your goal from the onset is meeting up with the tuition of the child at a particular period. So in a case of death, when death crystallizes that the customer is no more, if the optional rider is selected, that is the maintenance benefit, a proportional amount of the sum assured is payable to the beneficiary till maturity.
Wow. Okay.
In case it is not selected, it won't be paid. But the company steps in to cover the premium till maturity, and upon maturity, the agreed sum assured is payable.
All right. It's quite unfortunate we cannot really run this off just like that. But how long do I have to wait before I can make a claim? Quickly. How long?
If there is no claim,
are there waiting periods?
Okay. When you speak about waiting period, yes. So for school fees, there is 6 month waiting period.
6 months.
Yes, and 12 to 4 months for pre-existing condition when the policy commences.
All right, we'll leave it at that for now because of time constraints, really. So let me say a very big thank you to you. Maybe next week we can still touch down on this and look at some pre-existing conditions that might allow or disallow the participation in this particular kind of policy. But Joshua, let me say a very big thank you to you. Thanks so much for being here.
Thank you very much for having me.
And Oluwatomi Ogunshola, thank you so much for being here too.
Thank you very much for having us.
Okay then, so both of them, they're from ICO PLC, and this evening we've touched down on the school fees insurance plan. You can go out there or perhaps go to the website and find out how you can participate in this kind of insurance policy so that you can guarantee protection for your children's schools, their school fees in the future. We have to go. The program has been produced today by Taiwo Barua, and I say a big thank you as well to Definite Media Concepts for putting all of this together. A maximum shout out going out to Remy Aluko of our social media team. My name is Victor Oteri. I'm out. Stay very much within. Have a great evening. Bye.
There's a friend